Good evening, everyone. Hello, and welcome to today's webinar on greenwashing in the financial sector. I think it's time to start now. A few people will still be joining us. My name is Magdalena Senn. I work at Finanzwende as an expert for sustainable financial markets. And I'm extremely happy that Desiree Fixler is with us tonight and will give us her inside perspective on greenwashing. She is the person behind the greenwashing investigations at DWS, the asset management arm of Deutsche Bank. And I will still get used to saying DWS instead of DWS tonight because we're doing this webinar in English. Not only myself, but really the whole team of Finanzwende was super happy when Desiree agreed to share her experience in a webinar with us and a wider public tonight. Today's webinar comes very timely. Only yesterday, a joint investigation of journalists from several European countries showed that even investment funds from the dark green categories, more than half of them are invested in oil and coal. And I must say that at the beginning, greenwashing is really widely used as a term. And to make sure that we're all talking about the same thing tonight, I would use or propose a working definition for tonight, saying greenwashing means promoting financial products or entire companies as more sustainable than they actually are. And sustainable in this case refers to claims on environmental, social, and governance aspects, as in the popular acronym ESG that is widely used in financial markets. Before I get to introducing Desiree, here's a quick overview of our plan for tonight. We will start with a few technical hints, and then I will introduce Desiree and the DWS case. And after that, I will have the pleasure of starting the discussion in depth with her. And later in the more or less last half hour of this webinar, I will also try to take up as many questions as possible from the audience, as I'm sure there will be many. On the technical part, there are two different tools that I would like to mention. If you have any technical questions, put them in the chat that you find below in the menu bar, and you can write them there in German or in English, and my colleagues who are working here in the background, they will answer them for you. If you have questions on content, substantive questions, please put them in the F&A or Q&A window. Type them there, and my colleagues are organizing and collecting them in the background, and I will take up these questions, or as many of them as I can, later in the debate. So technical questions in the chat, substantive questions in the F&A window. And I would also like to mention that this web seminar is being recorded. This means nevertheless that as a participant, you will stay anonymous, and you also can ask questions in the chat that will not be in the recording. So really feel free to ask all the questions that you have in mind. And now coming to our guest of tonight's web seminar, Desiree Fixler. She has 20 years of experience in banking and sustainable finance especially. She was Chief Sustainability Officer at DWS, the asset management arm of Deutsche Bank. And in this role, she discovered that only a fraction of the assets that DWS publicly claimed to be sustainable actually fulfilled those criteria. And she tried to raise this issue internally and to get those numbers corrected. But instead of correcting the numbers, they fired her. And after that, to summarize things a bit, she turned to the Wall Street Journal to make those things public. And ultimately, it were her revelations that led to a raid of the DWS offices in Frankfurt by 50 police officers, and the US and the German financial supervisors and the German criminal police are investigating the case now. And only hours after this raid in Frankfurt that took place in May this year, the former DWS CEO declared his resignation. And recently it also became public that another top manager of DWS might have to leave as well. So to sum it up, Desiree's revelations caused a true earthquake in the asset management and sustainable finance world. And to my knowledge, it was the first case where greenwashing in the financial sector has really led to tangible legal and personal consequences. And today, Desiree is the chairperson of a nonprofit initiative with a focus on ESG in the venture capital sphere. And on top of that, she continues to call for a change in corporate culture and better protection of whistleblowers. And I would say now enough of the introductory words. Welcome, Desiree. We are very glad to have you with us tonight.
Thank you so much. I'm excited for this chat.
That's perfect. And I will start right away. I briefly outlined the story that had happened at DWS, but could you explain with some more detail what were the things you were actually criticizing, and where in that did you see the greenwashing?
Sure. When this story first came out, it was a bit confusing. So for me, this is a story about colossal corporate governance failure. So there was a contradiction between what the firm was telling its shareholders and investors externally, publicly, in press releases, annual reports, quarterly reports, right? Investor days. There was a tremendous contradiction between what they were saying externally to what was being said and documented internally. So as an example, right, DWS would make a statement that the majority of their, as you just said, the majority of their assets under management comply with an ESG strategy. The reality was internally, we didn't have a tracking system. So you can't make a statement externally and say there are 459 billion euros of assets under management in ESG, when internally there's no system tracking that. So, that was a tremendous red flag. And I said, we don't have to report this. So, let's figure it out first and then say something. In the meantime, we didn't have a system in place yet. But we could do some manual gauges. And what we found, and I'm talking about some of the most, senior folks at the company and ESG specialists, was only that a small fraction of the platform complied with an ESG strategy. I mean, you're talking about kind of being off by like 300 billion. It was massive and significant. The other part of the story is that DWS was positioning itself as a leader in the ESG space, having sophisticated ESG risk assessment systems, enhanced due diligence, right? The reality, right, was internally, the systems were called, quote, shit, crap. There were calls to, quote, trash it. A very senior person said the systems have high operational risk. Right. So, a tremendous contradiction, a very rosy picture being presented to shareholders and investors. Why? Because, this was a booming strategy. There were tons of money, inflowing into sustainability, into ESG. And but yet we internally had risk reports, email exchanges, heated debate, right? Board meetings and minutes. Telling a very different story.
Yeah, wow. It sounds really incredible what you're telling there. And I'm also wondering, when you arrived there and you first figured out what the discrepancy actually is between internal figures and external marketing numbers, what were your thoughts? I mean, that it's just mind-blowing.
It is. Look, companies don't get everything right, and mistakes are made. And it doesn't mean that it's systemic, right? In a large corporation at any time, someone's doing probably something stupid, right? And you have to manage that. So at first, I'm not sure what's going on. But the biggest red flag is that there's no tracking system. You can't report anything. And I don't care what regulatory regime we're under. You can't report financial numbers without having the data, the evidence behind it. So, I'm thinking, okay, well, maybe that's an estimate. But then when we did the deep dive, we saw that these numbers are probably off by about 300 billion. Now, it wasn't, remember, I was just there for 8 months. I thought, I wasn't sure what was going on. My statements, my reports were often greeted with silence, right? And I couldn't really see where this was going. My performance review was good. I had never received a bad, or any sort of critique on what I was doing. And remember, I was hired, and it said this in roles and responsibility, as a change maker. Remember, Deutsche Bank is a company in transition, right? It's a company that was considered the most scandal-prone bank for the last 2 decades, right? And when I joined, Deutsche Bank was under investigation for ignoring suspicious activity reports on Jeffrey Epstein, that person that did all those horrible things. But it wasn't that they banked Jeff Epstein. It was that they had the suspicious activity reports and ignored them. So they were under investigation by the SEC. Additionally, the CFTC was threatening to shut DWS down across America for loose financial controls. And finally, remember, in 2020, you have Wirecard totally collapsing, and DWS had an outsized position in Wirecard. It also, strangely, and this blows your mind, Wirecard was the top position in its flagship ESG fund in 2020, right? And the reason is, in their sophisticated internal risk assessment system in their database, they cited the wonderful business ethics and strong corporate governance of Wirecard. I mean, by the way, this is through June 2020. Marcus Brown was already being arrested, like the company filed for bankruptcy. So, I mean, there were a lot of issues, and I truly believe that I was being brought in, right, to help them with this cultural overhaul, right? That's what I thought Christian Zaving was talking about in Azoka. So I just kept pushing, and I just figured, well, things here are done maybe with more consensus management. Just be patient, breathe, do my meditation, right? It'll all come together. And it didn't. And it wasn't until I got fired in March, but it all started to unravel at the very end. It was really in February where I got a sense like, hang on a second, right? This isn't happening. They're moving away from me. I was starting to feel I was being frozen out. And then, ultimately, yeah, I knew I was being frozen out, but I never expected to be fired, and fired by post. They didn't even do it in person.
Wow. And apparently they were also not looking for the change maker that you thought they were looking for. That's really curious. And well, in the end, we can say that it was your ambition to do things properly, and your integrity to publish correct numbers that cost you the job. And after that, you went public. So you first tried the internal way, you got fired, and then you went public with this information. And I was, well, you
did, but I wasn't the first to bring it to the public domain, right? So you're right, I did go public, but they forced my hand to do that. So, remember, I was fired. The CEO wrote a very derogatory internal memo about me, and it was handed over same day to Bloomberg News. And they also called in, from what I understand, Bloomberg News and said, please print this. She's really bad. Bloomberg, again, followed the story to say I was fired, and again, took excerpts from Azoka Verma's internal memo. So at this point now, not only am I fired, I'm totally publicly discredited. It talks about, it more or less implies I underperformed and I have questionable business ethics. And then finally, they immediately went to, they could never get my email working. I never had DWS email. But what they could do very quickly is they ran to the immigration office and they pulled my work permit. So they also immediately made me homeless. I had to leave. I had no rights to stay because Americans at the time during COVID couldn't stay. So, you know, it was a massive, organized, orchestrated campaign to crush me. And I actually didn't know what to do. I sat on this for several months before making my mind up. Now's the time. I want the truth out there. You know, this is my narrative, and I'm going to go totally on the record with evidence. And then I responded several months later.
Right. Yeah. Thanks for pointing that out. And so it was basically to protect your own, or to correct what they put out there, and to save your own reputation, that you went out there. And I would like to ask now, you basically turned a whistleblower without without intending to do so, in a way. And what was your experience as a whistleblower? What is it like to be in such a dirty conflict with your employer? And like, looking back now, you went through all this. Would you say it was worth it? Now you are the name that is connected to the DWS greenwashing scandal.
I mean, it was traumatic. I mean, it was bad. I mean, I have 3 kids. I'm a single mom of kids. I mean, literally, we have no place to go. You know, everything is stuck. All my things are stuck in Germany. You know, so it was crazy. Like, you know, late in the game, I have to like go back home to mommy and daddy, right? And like, I need shelter. So it was really bad. I didn't know. I literally just took it on day by day. The press was fascinated with the story, so it was overwhelming dealing with the press. And I just did it, and I engaged with the press. And I was scared, by the way, because, you know, maybe I could be portrayed as a disgruntled, you know, former employee. She's using the girl card, right? I didn't know how I would be portrayed. But I thought, you know, the other thing that also motivated me to go public was that DWS upped all of their ESG rhetoric, right? So they ratcheted up very misleading statements about their ESG profile. And that also really got to me, right? Because I knew the truth. So, and, you know, I'm in the market, and, you know, we had seen some, you know, bad practice in ESG. I knew that greenwashing was widespread, maybe not as extreme as in my opinion, the corporate governance failure was at DWS, but it was widespread. So I was also motivated to say, like, this needs to stop, right? There is just such a contradiction between like what is being promoted through propaganda and corporate statements and the reality. And greenwashing, in my opinion, is really dangerous. I mean, you know, it misleads investors, right? And, you know, and also, right, companies producing green products, it also, you know, misleads consumers into investing or buying products that are good or going to have positive impact, right? When the reality is often very, very different. And so, you know, I told my story very authentically to the press. And, you know, that's the truth. Like, I also, you know, there are documents, right? I didn't talk about anything that I couldn't back up with documents, right? I had the evidence, the email exchanges, you know, risk reports, my presentations, and I stayed very close to that evidence. I mean, trust me, like, I was in New York a couple of weeks ago, and I was meeting some very senior corporate executives, American corporate executives, and they were, you know, asking me about the story, and I was telling them. I got stopped in the middle, and they're like, this needs to be a movie. This is unbelievable. I mean, it has everything in it. And, I didn't go into the details. I responded like the true story is even more colorful and more salacious. Like when you get into the personalities and what actually really went down, and that I haven't gone into everything because it's more important to have, corporate reform here. But yes, the bad experience here, I think, has actually led to positive outcomes in the market. I think that this has rippled through the industry, and many executives are taking a step back and being rightfully thoughtful in assessing their own companies to say, hang on a second, are we actually delivering on what we're saying we're doing, right? Do the labels match what the product actually is? And that type of reassessment is very healthy.
Yeah, well, thank you for sharing like really all of these also emotional aspects of your fight with this company. And I mean, it was really a corporate campaign against you. It's a proper David and Goliath story. I think I'm waiting for the movie, really. If someone asks you and someone calls and tells you he wants to turn a movie, you should immediately say yes, because I think it will be super exciting.
The next series of bad banks in Germany.
No, I think someone should do it, and maybe talking about it and telling at every instance that we need a movie about this. Maybe it helps to spread the word. No, but to come back to the greenwashing, I mean, you said very clearly that in this case it was like a proper corporate governance failure, but when we think about the qualitative aspect of calling things green that are not actually green, could you try to grasp a bit more in detail for us, like when it comes to products or to companies? I mean, the whole issue of labeling things as green, it's not easy because we are in a transitioning economy, and it's true. But where would you say does the greenwashing start? Like, where is it not innocent marketing, but really greenwash?
I mean, it's just down to if you're exaggerating the labels and the description, and the sales pitch of your product, right? So, we had the great financial crisis, and, I used to work, and I was like, previously in the run up to the great financial crisis, I was at the heart of it, right? I was at JP Morgan running a desk in credit derivatives. The biggest lesson, right, from the great financial crisis was that, guess what? Not only should you not break the law, but you shouldn't break the spirit of the law. Right? That was a huge lesson. There are consequences to our action, right? When you're structuring new products, when you're selling products, always take the conservative approach, right? Now, what blew my mind is that when it comes to ESG, what we see in the market is that, generally speaking, for a lot of asset managers, the conservative approach isn't taken, but instead they go with the cowboy approach, as if they never went through the great financial crisis and learned the lessons, right? So there's very much this aggressive cowboy approach that, the sense that just slap a green label on it, it'll blow out, right? It will be oversubscribed. There are no rules or no laws. There's not even a clear definition of ESG. So, anyway, it's aspirational, right? That is not the case, right? Increasingly, companies are generating material cash flows from ESG or sustainability products. It is a material part of their business, right? And if you're driving that material part or generating those revenues from mis-selling, you have a big problem. That's simply put, fraud. It's good old-fashioned fraud. And the best way to deal with this, and it is true that that ESG is still a nascent market. It's underdeveloped. We need, right, global, standardized, reporting requirements for companies. We need standardized definitions. There's no doubt, right? So in the meantime, companies have to do their best to take on this conservative approach and be completely accurate and transparent with what they mean by ESG or green and what exactly is in the product. You cannot issue an Article 9 product, right, and load it up, as you said at the very beginning, with like oil, gas, and coal, right, and mining and materials, right? Neither can you do this, by the way. Load up a product on just tech stocks. I don't see how investments in Apple, Microsoft, and Google, right, and a couple of healthcare companies, how that can be considered dark green. These might be progressive companies, right, but they're not in positive, impactful companies, right? And so, you know, I think the disclosure, right, is what's most important. Say exactly what's in the product and what you mean by the terms that you're using.
And now that greenwashing has been an issue and it's in the debate for a while, and then there was the big DWS scandal. To what extent has the market reacted to those things? How much greenwashing is still around in your view? I mean, the publication that came, I think, yesterday by Handelsblatt and others, they assessed the Article 9 funds, and they found lots of stuff that where they say they don't see a perspective of how this could be a part of the transition.
You know, look, SFDR, right, was set up the EU's Sustainable Finance Action, you know, plan, was set up with like really good intentions, right? You know, trying to stamp out greenwashing and classify products and mobilize investment into sustainable areas. That's all good. Unfortunately, right, the articles that were issued were extremely complex and extremely ambiguous, right? And you know, it's a shame, but I could say that it kind of enabled greenwashing because it became very much a kickboxing exercise, right? And I remember having the internal debate saying, like, come on, you know, this portfolio of generally, like, you know, high-tech American companies, right? How is that dark green? Right. And I don't buy the argument, because sometimes asset managers will say, well, yes, we've invested in oil and gas and fossil fuels, but we're engaging with these companies.
And it's all best in class.
Yep. And we're going to transition these companies to greener pastures. And, you know, my response is prove it. Because what I had seen, the movie I saw wasn't operating like that. There was engagement with the companies, that's for sure. But on financial and at times governance matters, I saw very little engagement on environmental matters, on climate matters, right? So, you know, you need to evidence this. If you're going to, you know, place, right, a dirty company, if you will, in an Article 8 or Article 9 fund, you need to justify why. You need to point that out. I mean, that is what is done regular way, right, in traditional finance, right? There are all those disclaimers and for the avoidance of doubt, right? And we need to become tight and accurate. And if for whatever reason, you can't prove your engagement, you know, with what exactly you're doing and the outcomes, don't say it, then you can't do it.
Right. And I think we agree that also the regulation is still, like the economy, in transition and under development. But I would still like to ask, how much have other asset managers changed? Have you observed? Have they become more careful?
Oh yeah. I mean, right now, I mean, if you read their recent reports, there's like 80 billion already of Article 9 funds are being, you know, downgraded to Article 8. So you know, there's tangible evidence in the market that many asset managers are recognizing they should have taken a more conservative approach. And so there's that reclassification, which is so important for investors. So now investors really know, right, what they've invested in. So yeah, I mean, I received, oh my God, so many calls from, you know, other asset managers and banks, like, you know, calling me up like, holy shit, Des, like, what happened? And I explain the story and they're like, oh my God, do you think we're doing it? So, but that is the right response, right? It is the right response, not to be arrogant and deny things, right? One of the most awful parts, by the way, in this whole Deutsche Bank saga was the inability to accept that something went wrong, right? Again, like I wrote to the CEO and the Vorstand at DWS. They, didn't do anything. I wrote to Carl van Roer, the chairman of the supervisory board and the president of Deutsche Bank, and Jörg Eigendorf, the global head of sustainability of Deutsche Bank, explaining everything, 5 pages of like what's gone on. And they would meet with me. That really blew my mind. I think like the greenwashing is really bad, but just as bad is like the cover up. Like, there's like the Watergate break-in, but then there is the Watergate cover up, right? And that's what makes it a scandal, right? And that I can't believe that the company, right? I was their sustainability officer, right? And even if I were more junior, these are significant allegations, right? And they were under a deferred prosecution agreement in the United States, right? So they were on probation, right? They had to report out to New York on any misconduct or any allegations of misconduct. And they just dismissed it all. Goldman Sachs, okay, so DWS was investigated in August 2021. Goldman Sachs was investigated this summer for greenwashing. They've just settled with the SEC, right? And I think there's this great quote by Lloyd Blankfein from Goldman Sachs, and he says, the best traders aren't right more than they're wrong. They're quick adjusters. They're better at getting right when they're wrong. And that's been a tragic failure, just the PR campaign and the position that Deutsche Bank has taken, not to want to meet with me, to understand, right? Not to want to better cooperate, I'm assuming, I don't know, but it's going on for so long. If Goldman could quickly adjust and say, we're going to get on the right side of this, like, okay, yep, let's settle this, right? Why aren't they? And the final point I want to make, and I should have done this earlier, the vast majority of people I worked with at Deutsche and at DWS are good people. They're not bad people, right? Just please note, and there were real pockets of excellence. So this wasn't like a people's problem. This was a specific top of the house management problem, right? There were a couple of bad eggs on the Vorstand of both companies. That's who did this, right? They, made they called the code red for certain individuals to execute what they wanted. But the vast majority of folks there are really good people.
It's good that you point that out. And I would say the whole story, I mean, already saying the Deutsche Bank saga, this would be the title for the film, just as a side note. No, but what I wanted to ask still is how to put it, when you pointed out things internally, nothing changed, but at least after you left, you caused the departure of the CEO and maybe also of that's still open, but there are some rumors that also the chair of the supervisory board might not get prolonged. And so I must say at Finanzwende, we're really looking up to you for this for this achievement ex post of I don't know, getting people out who didn't draw the right consequences of what they were responsible for.
Absolutely, and the COO of DWS is gone, and now the CIO has just left. So,
as well.
Yeah.
So we're having a list of all the your personal scorecard. It's
and that's not to mention the over 1 billion euros it knocked off of DWS's market cap. I mean, on the day that it was announced,
right.
In 2021 that the DOJ and SEC was investigating. I mean, that day the share price collapse, I think, was about 14%. I mean, that was an amazing, like, immediate reaction. And I'm hearing that legal fees there are in the tens of millions already.
Yeah, and that perfectly links to my next question, because I wanted to ask you as well. Like, it cost a lot in the share price, and I mean the reputation is damaged. are the types of risk you would say that are involved for an asset manager when they are caught on greenwashing? Like its reputation. What else is in the basket?
I mean, it's obviously regulatory fines that can be, extremely significant, right? The best course of action is that right course of action. Listen to your people, especially your senior people, right, who are in charge of this, and listen, have an honest, be secure enough to have that honest conversation, and if need be, you have to have a third-party investigative firm come in. That was the other mistake, that Carl von Rohr did, right? And I have a lot of, questions about, what the chairman of the board did, because initially he called in PwC, right? I hired PwC. They were doing an ESG project for us. So the same people that just started work on a commercial contract, they're like the same people are called in to investigate, right? Greenwashing. So of course that report, and then they're not forensic, accountants or auditors, right? And there was a clear conflict. You need to call not your buddy in, right? You need to call in, right? A company, largely probably a law firm, to come in where you don't have any relationship. There's no conflict, to do a proper investigation, right? And you can manage it. You will get through it. Look, this is what took Nixon down, right? Was the cover up, right, of the break-in at Watergate, right, and the slush fund and all of that stuff. For big things, they're not going to go away. You have to deal with it, and it was completely unnecessary. The whole saga was completely unnecessary. They should have just met with me. It was all manageable, right? Things would have to be restated, right? Different systems put in, but it was all very manageable. And even on that first level where they didn't take the right course of action, there were still so many other opportunities, right, to sit down and to better understand, right? It just doesn't hold any water to say we did nothing wrong, because already they have a guilty verdict. They violated the DPA agreement in the US. Right. And there's so many other questions, right? If Azoka was under investigation, why was his contract extended by Carl, right? What was going on here? There's a great article by Süddeutsche Zeitung, Micah Schreiber, who asked, a lot of these, that was commenting recently on this, and asked many of these questions, and very much for me looks like a corporate governance failure.
Yeah, right. And so there were all these failures internally to take the right steps. But what would you say, also from a more general point of view, what should financial supervisors be doing? What should be their approach to greenwashing? I mean, they've been waking up recently and they announced certain things, but is it enough? Should there be more? What should they be doing exactly?
Well, I think Germany got it really right. The US and Germany are leaders here. You can have policy, right? But your policy is only effective if you're enforcing it. And so one of the things I say about, regulation and why it's been effective, financial regulation has been effective in the States, because there are vast enforcement units. And Europe struggles because they have high level, like the Whistleblower Protection Directive, high level legislation and policy, but then locally you have to enforce, right? That doesn't always happen. But Germany did, having that police raid, from what I've been told from other major asset managers, that they were following the story, right? And they were doing their internal work and assessments, but where they just literally hit the pause button and accelerated everything was the police raid, right? Having the German police, I believe, with that police raid, and I understand that the investigation is still ongoing, right? I understand that. But just that act did more to stamp out greenwashing than the whole motherlode of EU, ESG legislation, SFDR and the taxonomy, because you need enforcement. That is what is key, and that is incumbent on the local regulator. And what I will say is that I'm sometimes asked, how could this have happened, right? And, why isn't there whistleblower protection in Germany, right? I didn't go to that, right? Please note, like, I didn't go to the regulator. They went to the press, I responded through the press. Then the regulators called me. I never went to them. But one of the reasons I never even thought about going to the SEC, because the BaFin is regulating Deutsche and DWS. And for me, that was under Hufeld, right? That was the Wirecard crowd, right? And I did not trust them. I felt, and I heard enough, bad stories that the BaFin would turn on whistleblowers. You didn't have automatic whistleblower protection. And that needs to be reformed. So the Bundeskriminalamt did a fantastic job, and I know the BaFin cooperated with them, but the BaFin, I think, needs to do a lot more with whistleblower protection. There's obviously new leadership there, and I know they've made some sounds about whistleblower protection, but this saga happened in Frankfurt. It could not have happened. It would never have happened in London and New York, right? The regulators and law enforcement would have come in so quickly. And again, there's so much oversight, right? And again, in London and New York, even Deutsche, London or New York wouldn't have done this. This is very particular to Frankfurt because there is a light touch when it comes to financial regulation and much less no whistleblower protection.
Well, thank you for pointing that out, and we'll note that down as homework for Finanzwende, because making finance and financial supervision work in Germany is basically our purpose, and I'm really glad about your openness on this point. And looking at the time, I must say I could go on like this forever because it's so exciting, but one more question from my side, and then we'll go to the question from the audience. So yeah, for the audience, we see all your incoming questions. Please keep posting them in the F&A window. My colleagues are sorting them, and I will take them up in a minute, and we'll try to cover as much ground as possible. But my last question for you, Desiree, is for consumers. This is really confusing. There are different standards. The EU taxonomy allows nuclear and gas, and it's really, we sometimes call it the jungle of sustainable finance. And what can consumers do to get an overview to really detect and avoid greenwashing when they want to save money for their retirement and not invest in oil companies, for example?
Unfortunately, at this point, you have to do your homework. And that's a lot to ask for investors to become greenwashing detectors. But unfortunately, you have to, look through the marketing material and ensure that there's clear disclosure, right? That you've looked at what's in the portfolio. Another point I'll make is look at the fees on the product. That's another bee in my bonnet, that a lot of times ESG products are sold with higher fees. That shouldn't be. And there's no asset manager should be offering any type of product with any sort of front loads, with a 5% front load and 1.5 basis point running, 1.5 point running fee, right? So look at your fees, right? That's just theft. That is the company stealing Germany's future. And there are too many German asset managers charging front load fees. You've just broken the fiduciary rule by depriving your investors of proper returns, right? So you can have a bigger house in the Taunusgebiet, right? So read what's in there. Look at your fee structure, and always be suspicious when you hear exaggerated claims, right? Everything that we're saving the world, and when there's too much marketing material, with wind turbines and solar panels, when it's over the top, be suspicious.
Right. I think that's great advice, and that's more topics that we note down for further work of Finanzwende, which is investment advice in the interest of consumers, or not in the interest of consumers, but that's another topic for another web seminar, I think. And yeah, now coming to the questions, people have been posting many questions, and I just start somewhere, and then we'll see how we get through. Here's one question saying, isn't the issue you described much broader about poor values and governance than just the issue of greenwashing? What you described could also be misleading and poor conduct in regards to other issues.
Yes, absolutely.
Yes.
So yes, that this was just a clear case of, in my book, right? You can have misrepresentation in any strategy, crypto or fixed income. In this case, it was ESG. So yes.
Right, thank you. And then the next one is on how much greenwashing there is, or there still is, in the sector. Could it be that more asset managers are claiming to manage with an ESG approach without knowing or exaggerating the exact number? Do you have any evidence on further cases? I mean, the evidence, I'm not sure you can share it, but you can still give us your impression, maybe?
Yeah, I mean, there probably is, but I think it's been, because of DWS, it's been dramatically reduced. And again, the evidence that I point to is all the reclassifications of the fund products in Europe. That's a real positive. And I think that companies are now becoming a lot more careful. I mean, in the UK, we had a case where the advertising watchdog penalized and called out HSBC for just presenting itself as very sustainable. But meanwhile, right, that's true. Part of their portfolio was, comprises of sustainable investments, but they're also financing a great deal of fossil fuels. And you can't just cherry pick things. You have to present the full picture. Yeah. So yes, I do think, but I think that combination of these stories coming out, people speaking up, and more firms getting, being investigated. I mean, already the US has enforced on Vale, Bank of New York Mellon, and Goldman.
Okay, so all the supervisory investigations also do a good job in pushing back against greenwashing. And there's one question that popped up about the definitions of ESG funds, dark green funds, and I can start quickly, and you maybe want to add to that. So the EU definitions for sustainable investments funds are in the Sustainable Finance Disclosure Regulation, and it comes with two categories. They are called light green and dark green for the Article 8 and the Article 9 of the regulation. And the light green means that some ESG criteria have been followed in the investment process, and the dark green category means that the investment has like a sustainable objective, so it wants to actually achieve or change something, for instance, lower CO2 emissions. And then that's the debates, the categories we're talking about. And that is also what Desiree has mentioned regarding the reclassification. So due to the increased interest in greenwashing and the increased scrutiny, fund managers have become more careful, and they take funds that were classified as dark green and they say, oh, maybe this one is only light green, and then they change the legal documents to reduce their own risks. That's basically what is going on there. That was just a technical one. Did you want to add anything to that, or should we move to the interesting stuff?
Yeah, that was all accurate. I have nothing.
Okay, then that's fine. The impact of your revelations. Do you see any indications that DWS will succeed in changing its culture? And what future do you see for DWS when it comes to dark green investment?
I mean, that is spot on. Like, they have to change their culture. Look, there's a new CEO there. Let's wait and see. Already, there's a couple of new board members coming in, and 3 have left. I think that the company also needs to have a better corporate structure and properly be independent. I think Deutsche Bank is way too influential. I know working there, we were just a division, right? I never felt like we were an independent company, right? It was very much, we towed the party line, right, from Taunus-Anlage. And I think that, being listed, I think minority shareholders should have, right, as much access to information, fair disclosure, right? So there should be better fair disclosure is what I would say. And I hope that they do this. I think it's a wake-up call as well that, having an ongoing investigation like over your head is a bad thing, right? Just sit down, right? You're gonna have to admit some things went wrong, right? And draw a line under it. That's why I brought up that quick adjustment quote, right? You have to be agile and adjust, right? It's just like to fight this battle that was unnecessary and so financially expensive for them. So let's see. I wish the new CEO the best of success. There are good people there, right? And it's about changing the culture on the top and moving away from getting a fairer corporate structure.
And we will keep watching how the Deutsche Bank saga further evolves. There's one big block of questions regarding what needs to change, like in the wider environment. So the first one is, what are the most important levers and changes needed from financial companies internally and from regulatory supervisors to prevent greenwashing? So what are the maybe top three internally and supervisors?
Number one, corporate structure. Do not have the sustainability office combined with communication, not marketing, right? Right. So
should be clear now.
As the first one. And, again, the sustainability office needs to be, the sustainability officer should be, considered a risk manager, right? Mm-hmm. Compliance officer, right? And reporting needs to go the traditional way through the CFO, right? So, financial and non-financial disclosure, right, has to go through regular way, the regular way, procedures to ensure accuracy. And the second one is disclosure, right? Just make sure everything is super, super clear, right? And that you're defining everything. You have, you point out, for the avoidance of doubt, this product may contain oil and gas. We underweighted versus this index, but right, and just be super clear about portfolio constituents, the objectives, the metrics you're using, the data, how you're collecting things, right? So often I hear from asset managers, oh, we have this like amazing, sophisticated internal proprietary software system. And meanwhile, it was one feed from MSCI. So be clear on the data collection and aggregation, right? So those are the two. And this is a good one. Walk the talk, right? If you're espousing all of these sustainability principles, make sure like you're also operating that like on the same level, that if you're talking about diversity and inclusion, that the Vorstand is truly diversified and top management throughout the company, right? That you deliver on your net zero pledge and, don't fly around first class, constantly and increase, carbon emissions. Like again, there has to be that sense check. You don't overcharge on products. Right. So make sure you're authentically doing it. Those are the three things. So organizational structure, disclosure, and walking the talk.
And since it links so well to walking the talk, I have to put in one of my own questions. There are all these voluntary pledges, and they have been they have promised great things. And so far, yeah, it's very aspirational, but do you think they can actually change something, or is this also just the marketing office?
I think no, I don't think these voluntary pledges are gonna change much. There is some progress, but it's not fast enough. We need government action, right? And then the markets follow through, right? So that's the thing. I'm glad COP27, there was less, kind of irrational exuberance and propaganda coming out, right? That said, we didn't get, the agreements that were needed on climate action. But one thing I'll point out, the US was a big laggard when it came to climate action, but the US passed some key and like real big milestone legislation, the Inflation Reduction Act and the Forced Labor Protection Act. And, both of them are ESG focused. The Inflation Reduction Act is going to mobilize directly something like, or approximately about 400 billion into clean technology and clean energy, true innovation. And the impacts, might even mobilize $1 trillion. So incredible government action right there. And we need more of that. The capital markets, like the governments need to come in with clear legislation, the guardrails, financial regulators demanding and enforcing on, clear disclosure and risk disclosure. And then, again, the market now can do a better job at standard setting and their voluntary initiatives. But in and of itself, we need government action.
Right. I think that's a very, very clear statement. And we continue with the block, what needs to change. There's a question on the role that credit rating agencies or a properly green taxonomy, as the person writes, what can they contribute?
To the credit rating agencies?
Yeah, I think the person
Okay.
writes credit rating agencies, but it might also mean sustainability ratings, I think.
Okay. From the credit side, I think that they have integrated ESG risk and opportunity factors into their financial material assessment. So that that is good. As far as the ESG rating agencies, I mean, I think it's a big challenge. I mean, number one, we don't have standardized reporting requirements, for corporations. The ISSB, the IFRS Foundation, and sorry, throwing out all these acronyms, but they are trying to, they try to unite all the standard setters to come up with one, set of reporting requirements for companies.
Just to add for our audience, that's basically the sustainability reporting of companies, where there's currently a global standard under development and also a European standard by a different group of, I don't know what it is, a different foundation for standard setting.
Yeah. And so that's the starting point, because now, again, you've got standardized ESG accounting where investors can make better informed decisions comparing apples to apples, right? And figuring out how, where they want to put their money. So these ESG data providers and rating agencies, they're working on a lot of incomplete data sets. There is low correlation amongst them because they have different methodologies, different approaches, right? Some are just focused on like MSCI, financial, materiality, the risk, the outside world, how the changing outside world affects the company, right? Others combine both, financial materiality with impact, right? How the company affects the outside world. And it's terribly confusing. The FCA here in the UK, is looking into considering to propose regulation for this market, because it's just such a mixed bag. Whereas, in contrast, when you're looking at the credit rating agencies, there's high correlation, right? So yeah, we need to do a better job there, potentially needs to be regulated, but at a starting point, we need, as you rightly pointed out, we need to have, a standard accounting first, right? Now, agency can properly assess it with complete data.
Yeah, and I can maybe add that the European Commission is also considering regulation on ESG rating providers. Building on this, maybe we need the disclosure, we need the information and so on, but for retail investors, do we need a better taxonomy one that also looks there's the discussion about taxonomy looking at transition activities. Do we need a consumer label? There were all these things being discussed in the Commission action plan at the very beginning, and now somehow the follow-up is gotten a bit slowly, and there is not so much there's not so much energy behind it anymore. What should be completed, or should there be further things that retail investors or that make retail investors' lives easier?
I would say this, that I'm not so big on like prescriptive taxonomies. I would say what I found to be very, very effective to get companies to take the right course of action is enforcement, right? And so, you kind of have a mixed bag in Europe. You have a lot of policy, a lot of task forces, a lot of bureaucracy, and just not many examples of penalties when someone does something wrong. And I think because why that's so effective, it just nips bad culture in the bud at the top of the house, right? And I get we're talking about like fraud, mis-selling and misleading, but that is so effective. Companies on high alert, and super focused on rigorous disclosure, that really reduces consumer vulnerability. So I would say, that policy, right, needs to be matched with, effective enforcement. And yes, when it comes to transition, that's very, very unclear. The FCA has a consultation, paper out where they have their own sustainability disclosure requirements, and they are, taking on transition. So that can be helpful. But again, what's most helpful at this point is to enforce and show the market and show the world like what not to do. And then that just, ripples and has the greatest ripple effect.
Right. I see you're all for the enforcement. That's I think that's something where Europe can still learn a lot from the US. Another question in the direction of the consequences of the whole DWS story. And it's a bit similar to a previous question, but I think it has an interesting turn in it. And the person is asking, do you see a mind shift in the sustainable finance industry to aim at achieving real change in the real economy? So what is the effect on the real economy? Or are most actors rather motivated by regulatory compliance? That's a very good one.
Okay, so this is clear opinion, right? This is not based on, I didn't sample, I didn't do the survey. I think there's several factors involved. And I think, when you look at the financial industry, right, or you can look at, anything, companies are acting because their stakeholders are demanding, right? So that's a big motivator. That's a big driver, to produce ESG products. I think another driver, of course, is regulatory compliance. I think, companies are set up, really to make money, right? They have to answer to shareholders. They have to answer to their employees, their supply chain, their clients, of course, but really they're there for profit. Are they there to make the world a better place? No. But now they've realized that if they don't have a sustainable approach, the world might eat them alive, right? Or they might do some really wicked things where consumers abandon them and the regulator, humongously fines them. So, but I don't think most companies operate. I think that as individuals, they want to be aspirational. They try and do the right thing, but that's not in their corporate statutes, right? Making money is, right? And I think the bigger motivators to be, sustainability minded is because of the pressure from their stakeholders, their consumers, selling products, and because of the regulator. But that said, the more that we have right, really, unfortunately, catastrophic events, and we are, living a world, right? I was going to a sustainability summit this summer at Oxford University, and I almost didn't make it because of the heat wave. The train tracks buckled here in the UK. All the trains were
Wow.
canceled. So I mean, we're living through some harsh times, and I think. But I do think that consumers, that we need to take on responsibility ourselves too, right? It's not just the companies. We need to stand up, and demand action. We need to write to our local politicians, right? We need to put pressure on the legislative branches, right? And work with companies. But we ourselves have to change our ways, and we also have some responsibility here.
Right. That's great that you point this out, because I think it's so closely linked from what we're talking about, sustainable finance, green financial products, but then the real challenge of the climate crisis, and that we're already experiencing today. And talking about the climate crisis, here is a question for a recommendation for young people. Does a traditional career in a corporate or even a consulting firm still make sense, or are alternative routes like journalism, law enforcement, or NGOs more effective? How do we achieve the change?
That's a great question. I mean, the one thing is, like, I always say, like, be bold, right? Be passionate, have strong conviction, and be ambitious. And that could be at a corporation, right? Or that could be, right, in journalism and law, right, and at an NGO. The good thing, one thing that I like about, like, my background when I think about it, is that I know how the other side thinks, right? Because I was a corporate beast for so long. And again, like, I drank from the Kool-Aid, back in the day, and, was part of, like, a big bubble when it came to, like, all those CDO products and whatever. And I learned my lesson, coming out the other side. That's good, right? To have that experience in working at large corporations, to see how it all works, and then maybe transition, right? You become, full rounded. But that said, like, I would never tell someone to compromise their values or their principles. You follow your dreams, you take risk, and be bold.
That's great. It's all about the mindset. And I'm also glad about you sharing your corporate experience with us NGO people here, because I think it's such a good learning thing for us as well, because understanding how all the mechanisms work, the governance works, how change can happen. It's perfect to get involved and to exchange on these things. I'm really glad about this opportunity. And I'm having a further look at our long list of questions. I can already tell everyone we won't manage to cover all of them. I'm sorry, and I'm trying to pick out the ones that cover ground that we haven't talked about so much yet. That's a good one. It's about whistleblowing. And the question is, how come that you can talk so freely here? Isn't there a risk you'll be sued now? And why are you the only one who spoke out?
I don't know. I don't know. I think I don't know if I can be sued. I mean, it's been quite a while. I've been talking about this. It'd be kind of late in the game to do something. It also would be stupid for the company, because then they have to replay it in the public courts, like live it every day. And then all that salacious stuff comes out, all the juicy stuff comes out. I'm not sure they want to go there, but I don't know. It's my duty now, right? So my life blew up, right? It did, right? And I had to kiss my corporate career goodbye, right? No company is going to hire me. But what they do is they engage me for advisory projects, right? So I am working, I'm part of the board of the CFA to standardize definition reporting requirements. It's not public yet, but it soon will be, and we'll be on an ESG board for a big regulator. And then I do lots of speaking engagements and project advisory work, like greenwash detecting and prevention. But there is a public service for somebody. I'm not affiliated. I'm not filtered, right? I don't have to go through like Big Brother, in the communications department, right? I can freely speak. Because I'm not affiliated with any one company, of course I have to tell the truth and be accurate, right? And identify, what I know, my source, and where I'm sourcing that from, to what is opinion, right? But I think that for me, it's fun because I have a really varied portfolio of work. And again, I get to just say it. I wasn't like this, by the way, at, in my corporate jobs, right? I was outspoken, but I would never be this free, right? You can't be. But I think, that sometimes bad things happen in life. Life throws you a curveball and you just have to go with it. And that's what I would say about whistleblowing, is that expect, right? Sometimes you whistleblow and the company, deals with it in the right way. Right. And then, whistleblowing is about, let's just take one step back. Whistleblowing is about protecting the company and protecting your colleagues. It's not being a traitor, right? When you see the company or someone doing something wrong, you're speaking up because you don't want the company to get in trouble. You don't want the company to collapse, right? You also don't want your colleague maybe to continue doing something wrong. And the next thing you know, he or she's in jail, right? And we need maybe a better term for whistleblowing, because it's positive corporate action, right? Some of the greatest changes have happened because of whistleblowing. Susan Fowler standing up to Uber, right? Gretchen Carlson standing up to that horrible person, Roger Ailes and Fox News. And she's gone further. She's affecting change in employment law effectively. Dan McCrum, with Wirecard, right? Folks in the 1970s outing unsafe, procedures with, in the nuclear plants, right? Watergate, right? We need this. It is needed. It is vital for society and for companies to improve. We need people to speak up more. And I would say this, that there was a better speak up culture in the 1990s when I started than today. We're far more guarded and there's far too much groupthink.
Yeah, that's a whole new topic that we should discuss at a follow-up web seminar on whistleblowing for internal whistleblowing channels and external channels. I know there's so many good ideas around there, and it's a pity for society and for companies that all these people with good intentions are not heard. It's really dramatic. I'm trying to find one good last question. I have one myself, which I wanted to ask all the time. And I think it widens a bit the perspective of, the role of finance in the green transition. And you spoke about individual change, how we can contribute to fighting climate change and write to politicians. But how do you see the relation between what can individual change achieve and where do we need the systemic solutions? Because you also spoke about government action. So how do you see the relationship between individual action and both linked to finance, saving my money in green products versus the regulation that makes sure all financial actors only invest in things that are compatible with the Paris Agreement? That is in a way the ultimate goal.
It's just, standing up and being active in whatever your role is, at your company, right? And right, just, I guess maybe one of the examples that comes to mind is Occupy Wall Street. So, when the financial crisis was, rolling out, right, and decimating so many people in the U.S. and across the world, but in the U.S. there was Occupy Wall Street, where people in finance, right, at the big firms, right, got together and they just camped outside downtown, right, and took peaceful action, protesting, and again, they engaged with the public sector, and because of that public pressure, Congress had to act, right? And you had the passing of Dodd-Frank. All banks had to be recapitalized. They had to mark everything to market, clean up, right? And part of that was absolutely grassroots, right? People standing up, and Main Street standing up to Wall Street. And it did cause tremendous change. I mean, back in the day when I was working in investment banking, it was a lot of fun. Today, it's not. But that's why I think that's what, is supposed to be, right? It's, not supposed to be like all cowboys, right? And so that's an example I could say. But I think there is a lot of great, right, grassroots movements and people getting involved. But it's to pressure the government to take more action, as with companies.
That's a great closing remark, because we're running out of time, and we're coming to the end of this web seminar. I really, really enjoyed this conversation very much. I think we covered a lot of ground, not only greenwashing, but governance aspects, financial supervision, culture, all of that. I think there are many open questions that we can still continue to discuss in the future, but I also found it very encouraging to see how you also believe in civil society action, because that's what we're trying to organize at Finanzwende, to bring people on the streets to stand up to a financial system that is not fair in many, many instances. And so if you're interested in our work, you can sign up for our newsletter. My colleague is copying the link in the chat. It is in German, so for many this might be easier to read, like for me, but I think well, yeah, we had a very interesting conversation. Keep following us, keep following the topic, because I think a lot is going on, and we really have to strive for positive change in all of what we've discussed tonight. And it remains only to say thank you, Desiree, for joining us, for sharing your story, which is also a difficult one. You've really gone through a difficult time in the last years, but for me it's very impressive how your integrity really got you through all of this, and now you're advising people on how to do things better. And I think that's a great development also for us to see how people who stand up in the financial system can, and in a way at the moment ruin their career, maybe can still achieve great positive change later on.
Thank you so much. I really enjoyed it, and I look forward to part 2.
Perfect. We'll have part 2, 3, and 4, and the movie. That's on my list for sure. And thank you also for all the participants. Thank you for joining in, for asking all the questions. Apologies for all the questions I couldn't take up because there were really many, but that's hopefully also for next time. Have a nice evening, and I wish you well.